Welcome back to Captain Crypto's Compass, and in this video we're going to talk about the legendary Stochastic RSI and how you can use it to help you make better informed decisions on whether we have bullish or bearish momentum in the market. Hi, I'm Martin. I'm the founder of Captain Crypto's Compass. I'm a trader and a professor at the Financial Freedom Academy. I am passionate about helping you to achieve financial freedom through the art and the gift of trading. I will be providing you with actionable technical analysis and insights on your favorite cryptocurrency projects to help you make better and more informed decisions. If you're ready to take your trading to the next level, you're in the right place. I've gone ahead and opened up the Bitcoin chart on the 1 week on Coinbase, on TradingView, and how we can add the Stochastic RSI indicator to our chart is simply go to the Indicators tab and type in Stochastic RSI. And the one that we're looking for is this one over here. You can go ahead and favorite it if you like, but you can just add it to your chart by clicking on it. Now, the first thing is this is an oscillator, so it is a chart below the chart. It's not on top of the chart. And it might look a little bit confusing at first with all these, the blue line and the orange line, and it moves up and it moves down and up and down. But I'm here to make it super simple for you. The basics of the Stochastic RSI is that it is a stochastics calculation of the RSI itself, and it measures momentum in the market, whether we are bullish or bearish, based on the RSI's movements, its previous highs and previous lows. Now, we don't have to go into too much detail on the exact ins and outs of the Stochastic RSI. I want to show you how you can quickly and effectively use this to help you to make better decisions in the moment. Now, the first thing is if we open up the Stochastic RSI, as you'll see, we have a blue line and we have an orange line. And the basic premise is that if the blue line is above the orange line, it indicates bullish momentum in the market. And if the blue line crosses below the orange line, it indicates bearish momentum in the market. Now, to illustrate this, let me just go to the chart and highlight and mark specific areas on the chart where the Stochastic RSI, at least on the weekly, had these positive and negative crosses, and we can have a look at what the price action did. So if we look at this positive cross over here, we can see the blue line is crossing above the orange line. Let's mark there. Here we can see the blue line crossed below the orange line, above, below, above, below, below, above, below, above. And I'm just going to continue doing this just so we can see what happened when we got these crosses. The first thing you'll see is if you're following along as I'm marking these on the chart, you'll see the price is starting to move in conjunction with the Stochastic RSI, which is fantastic. That's what we want to see. Now, there's a lot of lines and charts, but let's go ahead and just visually see what the effect is on price as soon as we have these positive and negative crosses. And you'll see quickly that as soon as we have the blue line above the orange line, we have an increase in price. Momentum shifts from the bearish momentum to bullish momentum. And as soon as we have a cross down, we have this bearish momentum re-entering the market. As soon as it crosses up, we can see we have another bullish momentum up, crossing down, bearish. Cross up, bullish, cross down, bearish. There's another cross up, bullish, cross down, bearish. And we can see how simple this indicator then is with these positive and negative crosses. Every single time it crosses above the orange line, price goes up. Every single time it crosses below the orange line, price goes down. And we can see this pattern repeating over and over again. So we can see then that it definitely works. It shows you these momentum shifts in the market. To the upside, price moves up. To the downside, price moves down. Upside, price moves up. Downside, price moves down. Now, understanding that, let's remove these drawings here and we can have a look and talk about a little bit more details on how this indicator should then be used to help you see these changes and momentum in the market. Now, the first thing that I do if I open up a chart and I'm busy opening up positions, I like to open the Stochastic RSI just to gauge where my momentum is at currently in the trading session. Is the blue line above the orange line? Meaning, is there bullish sentiment or bullish movements in the market? Do we have that bullish sentiment in the market with the blue above the orange? Or is the blue line below the orange line indicating that we have this bearish sentiment and bearish downside pressure currently in the market? So that's my first thing that I check with the Stochastic RSI is where are we relative to the stochastics? Are we bullish or are we bearish? Then the next thing I look for specifically is how far away are we from either one of these overextended areas. And what I mean by this is you'll see that I've marked out specific levels on the Stochastic RSI for myself. The 80 level, the 20 level, and the 50 level. Now, a general premise is anything above 50 is getting to that overextended area in the market, and everything below 50 is getting to this oversold conditions in the market, meaning that the momentum shifts is way down there. There's a lot of blood in the streets. Hey, I hope you're still enjoying the content. Remember to hit the like button, hit the sub button, and to ring the bell for notifications. Your support means the world to me personally, and I cannot do this without you. Now, from a trading perspective, we know that we need to sell when people are buying, and we need to buy when people are selling. So the Stochastic RSI helps me to gauge the market sentiment relative to how the RSI's previous moves in the market, because this is the stochastics of the RSI. So it's an indicator of an indicator. So I'm waiting for two things. Now, the creators of the Stochastics RSI advised that if you see the Stochastics RSI below the 20 and you have a positive cross with the blue line crossing above the orange line, this is an early warning sign, an early signal of bullish momentum entering the market. But we have to wait for a further confirmation of a move above the 20 level to confirm the strength of the momentum to the upside. We can see here that if we have a cross and it struggles with this 20 level, that's an indication that the momentum is not strong enough to push us higher into these higher areas. And we can see, if we just look at this positive cross here with the struggling at this 20 level, we can see that price fluctuated relatively slowly and consolidating in this specific range as the stochastic showed us the momentum. But we only had a blast off moment as soon as we broke above the 20 level in the chart. So this is something to keep an eye on. It is a further indication and strength indication of a specific move. That being said, while you are trading, any crosses below the 20 level could be stronger than crosses above the 20 level. So here we can see Bitcoin is currently having another positive momentum shift in the market. However, we can see that it is quite far away from this 20 level, giving us a clue that this specific move might not be as powerful as we thought it might be. And the opposite is also true, is if you have a negative cross down, I want to see how close we are to this 80 level, this extended level in the market. Anything above the 80 level is a very hot period. It is a very bullish period in the market, according to the Stochastics RSI. And when we have a cross down above these levels, we need to wait for a confirmation below the 80 level to confirm the move down. Now, there are situations where we have a lot of negative crosses above this 80 level, but where the price still increases in value, even though we have a negative indication on the Stochastics RSI, meaning that we are still in this hot overextended zone above the 80 level. So this is a trick that we need to keep in mind with the Stochastics RSI, that if we do have these positive and negative crosses above the 80 level, that price can still increase in price as it consolidates and as it moves in this period. And a confirmation of the negative downward momentum will be a confirmation with the blue line below the orange line below the 80 level. So this is very important. While using the Stochastics RSIs, we need to identify these two zones for us, above the 80 level and below the 20 level. And as soon as we have crosses either above the 80 level or below the 20 level, we need to wait for confirmation breaking either above the 20 level or below the 20 level for a confirmation, additional confluence for further downside potential in the market. Now, understanding all of these things, that makes reading the Stochastics RSI extremely simple and extremely easy to understand. And due to this fact that it's so easy to understand the Stochastics RSI, that makes it one of my favorite trading indicators, because I can visually, simply and quickly see whether we have bullish momentum, how strong that momentum currently is versus previous periods on the RSI, and whether we are, how close we are to being above the 80 level, meaning that overextended area in the market where we can expect a reversal, or how close we are to the 20 and under level that indicates that we are at that level of the market finding its bottom, the momentum resetting, so to speak. So that's what I love about the Stochastics RSI, is to quickly see, are we above the 80? How far are we away from that 80 level? Are we below the 20 level? Do we have these crosses? Can we have confirmations? And this helps me to gauge the momentum in the market very quickly. quickly. So I hope this helps you. Add this indicator to your toolbox. You can add it on any chart, any time frame. Obviously, the lower the time frame is, the more false signals you will have. So it'll be important to then monitor where we are at these key levels, being the 20 and the 80. Wait for that confirmation below the 80. Wait for that confirmation above the 20 before taking your positions. However, it also gives us these early indications for our higher risk traders that if we do get across below the 20, it's an indication that something is coming. Momentum is shifting in the market. Fantastic indicator, and I would recommend any and all traders to start using the Stochastic RSI. Now, if you're interested in this type of content, I would encourage you to visit the link in the description below. I am a professor at the Financial Freedom Academy, and we have thousands of people just like you who want to learn how to trade, who want to be shown how to use indicators. We teach specific trading strategies, combining various indicators to help you find confidence and to make better decisions. Now, if this rings true with you, if you want to be the best possible version of yourself, you want to join a group of people who are all seeking to improve their lives, to be better traders, and to be financially free, visit the link in the description below. Thanks for watching. If you enjoyed this content, hit the like button, hit the sub button, and hit the bell notifications. Also, remember to click the link in the description below to join my mailing list, where I'll be sending you free emails and trading videos, and also market report updates weekly to help you stay ahead of the herd. As always, this community would not be the same without you, and thank you from the bottom of my heart. Peace and love. See you next time.